Here's a summary of Oracle's 2025 Q4 earnings call, designed for a clear and concise read-aloud experience. Introduction. Good afternoon, everyone, and welcome to Oracle's fourth quarter and fiscal year 2025 earnings conference call. Today, we'll be discussing our financial results and future outlook. We've made our press release and financial tables available on our investor relations website, which include a GAAP to non-GAAP reconciliation and supplemental information. We'll also have a list of recent Oracle Cloud customers available online. On the call today are Chairman and Chief Technology Officer, Larry Ellison, and Chief Executive Officer, Safra Catz. Please be aware that today's discussion will include forward-looking statements, which are subject to risks and uncertainties. We encourage you to review our most recent SEC filings for a complete discussion of these factors. Safra Catz's opening remarks. We had an excellent finish to an amazing year, with both Q4 total revenue and EPS exceeding my guidance. Oracle Fusion continues to enable us to announce our quarterly and annual financial results faster than any other S&P 500 company. We've reached a tipping point in our cloud transition, and revenue growth is accelerating. In Q4, we achieved double-digit revenue growth, and this trend is only going up, even as the company gets larger. Our remaining performance obligations, or RPO, now stand at a robust $138 billion, up $8 billion from last quarter, and a significant 41% increase from last year. Our applications business, which we moved to the cloud over a decade ago, is now the leader in enterprise back-office SaaS solutions for ERP, financials, EPM, HCM, supply chain, and manufacturing. With the addition of over 100 AI agents, strong bookings, and higher renewal rates for our strategic SaaS products, we expect cloud applications growth to accelerate this coming year. Our infrastructure business, OCI, has seen exceptional demand for infrastructure services. Our engineering decisions, different from other hyperscalers, are better suited to enterprise needs, offering lower costs and deployment flexibility. Contracted non-cancelable bookings in RPO give us confidence that OCI revenue will grow over 70% this current year. This includes our Oracle Autonomous Database and AI Data Platform. Enterprises recognize the critical need for capable databases to manage their full datasets for AI, and with our AI and autonomous features, customers can consolidate data, make it available for LLMs, with built-in security. Our multi-cloud offering provides flexibility for customers to run Oracle databases in OCI, private clouds, or partner clouds. The clear trend is that more customers will use the Oracle database to leverage AI. Financial highlights for Q4 fiscal year 2025. Total cloud revenue, SaaS plus IaaS, up 27% to $6.7 billion. Total cloud services and license support revenue, up 14% to $11.7 billion. IaaS revenue, up 52% to $3 billion, on top of 42% growth last year. OCI consumption revenue was up 62%, with demand dramatically outpacing supply. Our infrastructure cloud services now have an annualized revenue of nearly $12 billion. Cloud database services, up 31%, with annualized revenue of $2.6 billion. Autonomous database consumption revenue was up 47% on top of 27% growth last year. As on-premise databases migrate to the cloud, we expect cloud database revenues to be a significant driver of growth alongside OCI and strategic SaaS. Infrastructure subscription revenue, up 19% to $6.7 billion. SaaS revenue, up 11% to $3.7 billion. Strategic back-office SaaS applications now have annualized revenues of $9.3 billion, up 20%. Software license revenue, up 8% to $2 billion. Total revenue, up 11% to $15.9 billion. Operating income grew 7%. Non-GAAP EPS, $1.70. GAPFs, $1.19. Financial highlights for full fiscal year 2025: total company revenue, up 9% to $57.4 billion. Total cloud services and license support revenue, up 12% to $44 billion, representing 77% of total revenue. Total application subscription revenue grew 7%. Infrastructure subscription revenue grew 17%. Total cloud services, up 24% to $24.5 billion. IaaS, cloud infrastructure, revenue, up 51% to $10.2 billion for the year, with consumption revenue up 59%. SaaS revenue, up 10% to $14.3 billion for the year. Non-GAAP EPS, up 9% to $6. Operating income grew 9%. Operating cash flow, up 12% to $20.8 billion. Free cash flow, negative $400 million, with $21.2 billion of CapEx. Free cash flow, Q4 negative $2.9 billion, with $9.1 billion of CapEx, the vast majority of which is for revenue-generating equipment for data centers. Management's forecast for future quarters and years: we are raising our revenue guidance for fiscal year 2026 to over $67 billion, up 16% for the year. Fiscal year 2026 total cloud revenue expected to grow over 40% in constant currency, up from 24% in FY 2025. Fiscal year 2026 cloud infrastructure revenue expected to grow over 70%, up from 51% in FY 2025. Fiscal year 2026 total revenue expected to be at least $67 billion, up 16% in constant currency. Fiscal year 2026 RPO likely to grow more than 100%. We expect to exceed the revenue growth target previously provided for FY 2027. Beyond FY 2027, we are even more confident in our ability to meet and likely exceed our previously provided FY 2029 target. We will provide a more detailed update at Oracle Cloud World in October. Guidance for Q1 fiscal year 2026, non-GAAP basis, total revenues expected to grow 11% to 13% in constant currency and 12% to 14% in US dollars. Total cloud revenue expected to grow 26% to 30% in constant currency and US dollars. Non-GAAP EPS expected to grow between 4% to 6% in constant currency, $1.44 to $1.48, and 5% to 7% in USD, $1.46 to $1.50. Capital expenditures: we expect FY 2026 CapEx to be higher, at over $25 billion, as we work to meet demand from our backlog. As we bring more capacity online, our revenue and profit growth will further accelerate. Shareholder returns: at quarter end, we had $11.2 billion in cash and marketable securities. We are committed to returning value through innovation, strategic acquisitions, stock repurchases, prudent debt use, and dividends. This quarter, we repurchased over 1 million shares for $150 million. Over the last 10 years, we've reduced shares outstanding by more than a third. We also paid out $4.7 billion in dividends over the last 12 months, and the board has declared a quarterly dividend of 50 cents per share. Larry Ellison's remarks: Oracle's future is exceptionally bright in this new era of cloud computing. Oracle will be the #1 cloud database company, the #1 cloud applications company, and the #1 builder and operator of cloud infrastructure data centers. We will build and operate more cloud infrastructure data centers than all of our cloud infrastructure competitors combined. Most of the world's most valuable data is stored in an Oracle database, and all of those databases are moving to the cloud, Oracle's cloud, Microsoft Azure, Amazon, or Google. Oracle runs everywhere. Our latest database version, Oracle 23AI, is an AI data platform, uniquely enabling customers to make all of their data immediately available to all popular AI large language models while maintaining complete data privacy. As AI use increases, so will Oracle's database market share. Oracle will be the largest and most profitable cloud applications company in the world. We've developed suites of integrated AI agent-based applications for ERP, EPM, supply chain, manufacturing, human resources, and customer engagement, plus industry applications for healthcare, banking, and more. We use the most modern application generators and AI database technology, and we add AI analytics using OpenAI, xAI, Google, Llama, and other LLMs on top of that application data. No other company is attempting to build the depth and breadth of AI-based applications that we have already built. Oracle will build more cloud infrastructure data centers than all competitors combined. All of our OCI data centers, from the smallest to the largest AI training centers, include all Oracle OCI capabilities. A large percentage of these capabilities are autonomous, minimizing labor costs and human error. Oracle is already prospering in this new era of cloud computing and AI, and it's just the beginning. Key investor questions and management responses: AI business durability and profitability. Larry emphasized that Oracle has most of the world's valuable data, primarily in Oracle databases. The Oracle 23AI database is the key enabler for companies to use AI on their own private data, which competitors do not offer. This unique value proposition will drive dramatic growth in the database business. IS growth in Stargate. Safra confirmed that while Stargate is still in formation, partnerships are a significant part of the enormous growth rate. The RPO and pipeline are so large that supply is still not meeting demand. She highlighted that Stargate is part of the overall growth, but many other partnerships and business areas are contributing. She also clarified that while OpenAI is a partner, current numbers are small in the grand scheme. Capital expenditures. Safra explained that the higher CapEx is primarily for buying components to build computers and fill out data centers to meet overwhelming demand. They are putting out as much capacity as possible, as quickly as possible, often driven by large, unprecedented orders. She anticipates FY 2026 CapEx might even exceed $25 billion. Larry added that significant engineering investments are being made in high-speed networking to improve speed, reliability, and reduce costs. Cloud database migration. Safra stated that the database business is really healthy and really growing, with strong performance across license support, new licenses, and all cloud metrics, including multi-cloud. She illustrated the potential by stating that if just $10 billion of their database support revenue moves to the cloud, it could translate to at least $50 billion in cloud revenue due to the inclusion of computers and networking. Application growth and strategy. Safra highlighted that strategic SaaS products are going gangbusters. The compelling nature of AI capabilities, only available in the cloud, is driving migration from on-premise ERP. She also emphasized the advantage of Oracle's integrated suite of applications, where ERP, EPM, supply chain, and more are designed to work together seamlessly, eliminating integration costs for customers. This offers a one-stop shop for running an enterprise. Full-stack advantage. Larry reiterated that Oracle's advantage lies in building integrated technology from applications down to infrastructure and even silicon. This full-stack approach allows them to solve technical problems at the right layer, leading to a faster, cheaper, and more reliable solution compared to competitors. The autonomous database, for instance, is a key reason for OCI's scalability, reliability, and security. Conclusion: we had a great year, and the current year will be even better. Oracle is well on its way to being not only the world's largest cloud applications company, but also one of the world's largest cloud infrastructure companies. Thank you for joining us today.